Greetings, everybody. Happy Monday. It is Monday, March 11th, 2024. Hope you're having a fantastical day out there. Hope you had a good weekend. It's a little overcast here in Colorado today, and we got some snow coming on Thursday. So 1 to 2 feet. So I'm probably going to be plowing the driveway while it's snowing and then plow it again once it's all done. So yay. Anyways. Like I said, hope you had a good weekend. If it is your first time watching Liberty Call, if you could do me a favor, if you could give me some thumbs up, a like, a share, a subscribe, a follow. Press that notification bell. You want to know when I go live. All right. Markets were kind of mixed today. Let's go ahead and jump over to the major indexes. The Dow Jones was up 0.12%, 46 points, closed at 38,769. It opened up like 200 points down or got to 200 points down at some point. The S&P 500 was down 0.11%, closed at 51.17. NASDAQ down 0.41%, closed at 16.019. The VIX up 3.26 today. It's up at 15.22. Canada up 0.15. Brazil was down 0.75%, and Mexico up 0.23. Germany was up 0.05. The UK up 0.12. France down 0.1%. The Netherlands down 1.12%, Spain up 0.19%, Italy down 0.27%, Switzerland up a third, and Portugal up 0.05%. Hang on a second. Water, it's good for you. All right, in Russia, the MOEX was up 0.13%, same with the RTSI. And the Asian markets, the Nikkei was down 2.11%, Australia down 1.82%, New Zealand down 0.24%. In China, the Shanghai was up 0.74%, the Shenzhen Component up 2.27%, China A50 up 1.78%, DJ Shanghai up 1%, even Hang Seng up 1.43%, and the Taiwan weighted down 0.3% for the day. All right, so like I said, kind of a mixed day across the globe, some good, some bad. All right, let's go over to the weekly economic update, see what it had to say. Stocks were down for the week as investors appeared to take some profits as traders parsed Fed Chair Jerome Powell's congressional testimony. Stocks had a rough start to the week with the Dow and S&P and NASDAQ each off more than 1% on Tuesday alone. Mega cap tech stocks were under pressure as investors appeared to take some profits. Markets clawed back much of their losses on Wednesday and Thursday with the Fed chair's upbeat comments to the Senate Banking Committee boosting stocks. Chair Powell said that once the Fed was confident inflation was tracking sustainably at 2%, who knows what that actually means, the Fed would consider cutting short-term interest rates. The S&P 500 and NASDAQ rallied with the S&P hitting a record close. Friday's employment news threw some uncertainty into the mix. The economy added 275,000 jobs in February, exceeding the 198,000 expected, but wage growth slowed and jobless claims edged up. Some investors saw that as negative, while others viewed it as a Goldilocks moment in the economy that's not too hot nor too cold. Stocks initially rallied on the news, but profit takers appeared to arrive as the day progressed. All right, the Fed Watch, productivity. Productivity is one of the critical data points the Fed reviews to determine its next steps with monetary policy. Producing more goods and services with fewer resources helps the economy grow while managing inflation risks. The 3.2% productivity gains in Q4 reported last week were mainly attributed to post-pandemic repair of supply chains. However, investors may hope that artificial intelligence will play a more significant role in productivity increases. Key economic data this week. Tuesday, we have the Consumer Price Index and the Treasury Statement. Wednesday is the EIA Petroleum Status Report. Thursday is jobless claims, the Producer Price Index, retail sales, and business inventories. And Friday is industrial production, import and export prices, and consumer sentiment. A few companies reporting earnings this week. Tuesday is Lennar. Wednesday is Dollar Tree. And Thursday we have Oracle, Adobe, Dick's Sporting Goods, and Getty Images. All right. It's exciting stuff, folks, I know. All right, let's move to the market recap for today. U.S. stocks cut losses ahead of key CPI data. Oracle earnings are eyed. On Monday, U.S. stocks rebounded from session lows as investors awaited key inflation data that could influence the Federal Reserve's stance on interest rates. The upcoming Consumer Price Index data, scheduled for release on Tuesday, will be closely scrutinized for insights into the trajectory of U.S. interest rates and the overall economic outlook. While expectations suggest a moderation in inflation compared to recent months, the core CPI figure is still anticipated to exceed the Fed's annual target of 2%. This follows a robust employment report that tempered expectations of a May rate hike, with June now seen as a more probable timing for the first rate cut, according to UBS. Federal Reserve Chair Jerome Powell and other central bank officials have indicated their preference for further evidence of weakening inflation before considering rate cuts. Additionally, market attention will turn to Thursday's retail sales data for February, forecasted to rebound after a previous decline. Amid the earnings season slowdown, software giant Oracle Corporation is set to report after market close. Investor skepticism prevails following disappointing performance in recent quarters, but optimism may rise if there is evidence of a recovery in enterprise spending and progress in addressing scaling issues. In corporate news, Choice Hotels International saw its stock climb after terminating a takeover bid from Wyndham Hotels and Resorts due to insufficient shareholder support. Boeing faced pressure after reports emerged of a criminal investigation by the U.S. Justice Department into mid-air fuselage breach on one of its 737 MAX jets. Elsewhere, Bally's witnessed a surge in its share price following a bid from Standard General, although the offer was lower than a previous bid in January. Equitrans Midstream saw gains after EQT Corporation announced plans to repurchase its former pipeline unit in an all-stock deal. Cryptocurrency-related stocks, including Coinbase Global, MicroStrategy Incorporated, and Riot Platforms, experienced notable gains as Bitcoin hit a fresh record high. Regulatory pressure and anticipation of the upcoming halving event contributed to the bullish sentiment in the crypto market. All right. So again, it's kind of like they said, Goldilocks. It's not good. It's not bad. It's just kind of medium right now. We're waiting for the bad. All right. Last up, got an article here from our friends over at First Trust, Mr. Brian Westbury's Monday Morning Outlook. This week's article is the job market really that strong? Let's see what Brian had to say. The recent headlines about the strength of the monthly payroll report may paint a rosy picture of the job market, with February seeing a notable increase of 275,000 non-farm payrolls, surpassing expectations. However, upon closer examination, the data reveals some concerning trends that suggest the job market may not be as robust as initially portrayed. One alarming aspect is the downward revision to payroll figures from December and January, totaling 167,000, the largest monthly downgrade since late 2008. This casts doubt on the true extent of job creation in February, which was only 108,000 above the original January level, with private sector gains particularly weak at just 19,000 after revisions. Such downward revisions have become increasingly common, reminiscent of patterns seen during or after recessions. Moreover, alternative measures like civilian employment, which include small business startups, present a less optimistic picture. While payrolls have risen by 2.7 million over the past year, civilian employment has only increased by 0.7 million, with the unemployment rate climbing to 3.9%. So those other jobs are probably government jobs. Of particular concern is the fact that the increase in civilian employment has been driven solely by part-time work, with a slight decline in full-time jobs. This discrepancy raises the question about the accuracy of the data and whether factors like immigration are skewing the figures. Actually, I saw a report recently that most of the job gains the last 2 years have gone to illegals, not native-born citizens. The influx of immigrants, possibly including illegal workers, may be boosting payroll numbers without being adequately captured by household surveys. Furthermore, there has been a notable divergence in the employment trends between native-born and foreign-born populations, with native-born employment decreasing while foreign-born employment increases. This suggests the complex interplay of factors affecting job market dynamics. While there's no clear indication of a recession, the underlying health of the labor market remains uncertain. Economic risks loom large, and the possibility of a soft landing is far from guaranteed. As the data continues to evolve, only time will reveal the true state of the labor market and the broader economy. So, yeah, I know everyone's clapping and cheering, saying, "See, look what the Fed has done. They've landed the economy on that smooth runway. It's things are fine." Who says they've landed anything yet? We still have to get through the next downturn without it destroying the economy completely. So we shall see what happens. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.